Good morning, guys. I hope everyone is cool. I also hope that you guys can hear me perfectly. I'm so sorry for being late here. I was actually outside, and as I will go to Portugal the day after tomorrow, I had to something buy. That's why I was just went for the shop. I hope you guys are good. Let me see it is what is happening actually. But yeah, please just let me know if you can hear me. Okay. Good morning. Good morning, guys. Thank you so much for saying that you can hear me. Just give me a second, okay? I really don't know what is happening. I need to make sure that I have an idea what is happening over here. Hmm. Sorry. Okay, perfect. Perfect. Okay, guys. Did you take any trade on this morning session? Anyone took any trade on this morning session? I'm already late actually. A lot of price action has already done, so would love to see if it can provide me something else. By the way, guys, the name you are seeing here at the rate of and then the username, it's actually because of the YouTube's testing. They're testing this way, and my channel actually is under their text. Test. So that's why you guys are seeing the username instead of the nickname. I sold one first present gap level ICT called first fair value gap. I took from first fair value gap 30 points. I tried shorting but didn't take my full target profit. Unlikely. Okay, took T2 fair value gap. Okay, whoever took the sale or saying about the sale, did you get your boom? I took from first fair value 30 points. Okay, Shiko, you got the 30 points. Thank you so much for being profitable over here, brother. What is your bias, sir? I just opened my chart. I don't have any bias right now. I have to see actually what is this. I was not in front of my chart for so long. I just came here. So I don't know what is the bias. Right now I'll just wait to see if this can provide me something. Just will take that. And just right now, no bias, nothing. Yes, I got the boom. Congratulations, Sophia. First five look at 943 candle short. What mistake I do? What did you say, Zahid? So then I was bearish this morning, but no trade so far for me. Okay, you don't have any trade yet. Okay. 5 minutes at 6:35 a.m. PST, and my expectation was market sweep, pumping and variety, but didn't happen. Okay, so that you didn't have any trade. Belmont, thanks for the penguin, brother. Right now, my interest to see that if it can come over here to this line. It's my interest to see if it can come to this gap first. 24669.50 are the exact lows on 1 minute chart. 24.5. What did you say? 24669. It's too far. I don't need to think about that right now. And it's not the exact low. It's the sell side liquidity, but not exact low. No, sir, I can't go for 5 minute chart. Unfortunately, sorry, I don't use 5 minute chart. So if you whatever you are referring to me through the 5 minute chart, I'm not able to explain anything from there. Hey, Eagle Sniper, how are you, brother? Hey, practice. If you mark the 24669.50 from 719 AM candle, you will see exact lows. If you mark where from 719 candle, 719 candle. Oh, okay, here. 7 and this is exact loss. Oh, that's cool. Now, thank you. Now it's cool. 6950, 6950. Absolutely. I'm more interested to see this buy side liquidity first. I'm cool, Eagle Sniper. Thanks for asking, brother. Yeah, thank you so much, Sachin. I didn't notice that there was exact lows actually. I was seeing this low and that low. But either way, that was the sell side liquidity. I'm not interested about that sell side liquidity right now. I'm more interested to see about this buy side liquidities first. This exact high over here, I would love to see this will be taken first. Hello, Mahadi. Team, the reason your full name is not being shown on the chat box is beyond the YT policy. You can go to your account setting and change the handle. It must be specific to be available username handle. Okay, guys, you can try that. This exit close was market target at open and then made another relative lows. Can it be like last Friday? Guys, I just opened here. I just came here. Okay, so I need a bit more time. After right now, I'm not thinking about anything else except a buy until this to buy side liquidity. Okay, right now. So I will actually decide my thinking after the candle close. If this candle close below this new week opening gap, maybe I can think about a sell. But right now, I'm not thinking about any kind of sell. I'm more interested to see a buy run toward that area. Even though I've seen that this highest up new to opening gap is holding the market, but still, I'm more interested to see if it can go higher. If it keep falling closed below this area, maybe then I'll try to frame any kind of sell. But until this 50-minute doesn't close, I'm not interested to look for any kind of sell. Hey Marquis. Perfect new to opening gap order block. Which order block you're talking about? Buy or sell? Bearish or bullish order block? Which is your order block, brother? this whole week should be a range bound week. So if you have watched the weekly analysis video over there, I have just one area I was in, I was wrong. Over there I told that the hourly anti fair value gap constant crossman should be traded, but it went actually a bit higher. So around this area I was wrong about that. Otherwise this is the whole week is ranging. This market is not moving going higher, is not going to fall. It is a range bound week. So this should be a range bound week. Bearish order block. I think you are talking about this candle. Yeah, it was so beautiful. So beautiful order block. Which is why I took the buy in the early morning. Didn't see it falling too much after that. That was a good idea, brother. Okay, guys, I have found my first buy actually. I don't know it will give me the entry or not, but this should be the first buy. Let's put it 1:1. doesn't give me the entry, it's gonna be tough. Let's see if it can give me the entry or not. Okay. Fortunately, it has given me the entry. I'm not able to put my stop loss below this order block because of the high volatility, so I have covered the mean threshold of that order block. Just the mean threshold. This is the mean threshold of that order block. So would love to see it will maximum fall until this mean threshold, and then it will reverse again from the mean threshold of that order block. Still, that is also more than 20 handle. Unfortunately, can't do anything there. I'll get stopped out, I guess. We'll go for rebuy if this candle failed to go below this low. I'll go for the rebuy when it will go above this order block again. That means this low is not taken by the body. I'll take rebuy when it will close above this order block, because I'm not able to put my stop loss over here. This should be the stop loss. I'm not able to put it over here, so I have covered that mean threshold only. Unfortunately, market stopped me out. If it go above this order block again, I'll take re-entry over there until this low is not taken by the body. If it is taken, that means no selling opportunity. No more buy opportunity. If whoever is interested to look for sell, please take the sell. I'm just saying you what I'm doing here. Okay, order block, I have to cover this low of this order block. I'm not able because of the stop loss. It will close one tick above this line. I'll take re-entry. So I got stopped out here. I don't care about that. I will take re-entry. If it close one tick above this order block, I'll take re-entry over there from that area after closing. Stop loss will be the same area covering that mean threshold, so something like this area, and we'll go for the same kind of partial 1:1, and then we'll hold my trade for the buy side liquidity. If you are looking for sell, please take the sell. The body will close above this line, which is the order block. I will take a re-entry over there. Body didn't close, no re-entry. If you are looking for sell, please take the sell. Brother, I can't use the 22 YT model in this highly volatile area because I will never be able to put the stop loss in logical level. So that's why I'm trying to use the order block logic so that I can make sure that my stop loss is a bit smaller or bit shorter. Just because of that, I'm not using the the 22 YT model, because it is highly volatile. One candle is kind of 50 handle. Okay, look at this candle. This is kind of 39 handle. Okay, so this is going to be my re-entry from this order block. I should push the button exactly over here. Again, I'm not interested to do that. I would love to see if it can take retake. I should push the button over here when it has closed. but I will try to take re-entry if it tap to this order block because of the volatility, just because of the volatility. So I hope that it will take me actually. If it doesn't take me, when this high will be shifted, there will be a fair value gap. I'll try to take the entry from that fair value gap. If it doesn't take me from this order block, I will take the entry when this high will be shifted and there will be a fair value gap. I'll take the entry from that fair value gap. If you are looking for sell, please take the sell. There is no kind of confusion. Okay, there can't be any kind of confusion like buy sell buy sell. No, there should not be any confusion. It's a bullish market. I'll try to take the buy only. I'm not interested to look for any kind of sell. This high will be shifted, that means this high will be shifted by the week or whatever it is. I'll try to take the entry from this gap. If there is a gap, I'll try to take the entry from this gap, or if there is another gap above this gap. Okay, so I'm going to remove this, going to remove order block didn't give me the entry, so I'm going to put it over here. I'll try to take the entry from this gap. Stop loss same area, just here, 25 handle. This will be my entry if there is a gap. It should be unfilled, so I will try to take the entry from this gap. I will prefer that it will just tap to this gap if there is a gap. If no gap, no entry. And same 1:1 partial, something like this. Okay, no gap, no trade. Still the entry is valid from the order block, because there is no gap, so it has to take me from the order block. If there was a gap, I would try to take the entry from that gap. As there is no gap, I will try to take the entry from this order block again. If there was a gap, I would try to take the entry from that gap. Even if there is one tick gap, is there any? I think there was a one tick gap. I didn't notice that. By the way, that was the thinking. Okay, later I have seen that there is one tick gap. My mistake. I didn't see there is one tick gap. If there is even one tick gap, the entry should be from that one tick gap. See this small gap, entry has to be from that gap. But you can see like this way, I was not able to see this area. Okay, like this area, so entry has to be here. Unfortunately, I have missed it. This is my mistake. I'm going to take the responsibility because I didn't notice there is a gap. So we'll see if it can come here, as I have already missed this one. Come here to take me again. Okay, one more tick, one more tick, one more tick. Okay, there you go. Not expecting it will come here to this main threshold. This should be the partial. Okay, 26 handle 1 to 1. So I will try to take the partial here. Okay, just put it here. Try to take the partial there. This should be the first partial. Will hold my trade for this buy side liquidity over here. So far I have a loss of 2700 or something like that. So we'll try to take the partial here around this area, which is going to be 3600 partial, and then hold my trade for this area. I'm going to remove this gap because it was too small actually, and I didn't notice that. I hope you guys got the point here why I got stopped out here, because the market, I was not able to cover the order block low. This is the order block low. I was not able to cover that order block low. That's why I tried to take the entry here, covered the mean threshold. Unfortunately, we did the damage. Because of the high volatility, I'm not able to put the stop loss below this order block low. As the order block low is not taken, I would love to take re-entry from the order block by covering the mean threshold, by believing that it's not coming back to this mean threshold one more time, because it has already done its job over there. Here is one thing I later I have noticed. It has traded the new week opening gap. I didn't notice that it has already traded that new week opening gap, by the way. It should not trade that new week opening gap. Even it trade that new week opening gap, it should have gone through this new week opening gap. It should have done that. Whatever, it's nothing to do. The first time it will close above this order block level, I'll put my stop loss below the order block. Wherever it will close, I'll put my stop loss below this order block. So I'm not able to move these things, so I will actually do these things like here. This is going to be the stop loss if it close above that order block. So that should be the stop loss. The reason is here, it has already traded the new week opening gap. I really didn't notice that it has already traded the new week opening gap, so I don't want to hold this trade so long, so I will put it just below this order block or a bit below here. Okay, so you can see the line is 20 something, 24,821 something, 24,821. So we'll try to put the stop loss over here around this area. This is my habit to trail the stop loss. You don't need to do that. You can keep the stop loss over here if you want, but as it has traded this new week opening up over here, I'm not really so much confident about this trade anymore. So I'd love to put my stop loss a bit higher, as the mean threshold should be failed to be traded, and this should keep going higher. If it stop me out here, I'll get stopped out over there. Okay, so by that area, so I'll get stopped out around this area. You don't need to trail the stop loss. You can keep it over here. I don't like to do it over there, so I'll put it over there and get stopped out, as it is reversing from this line. I really didn't notice that it has traded this gap. I was focusing only this 1 minute chart. Otherwise, I wouldn't reframe that trade. Okay, we'll get a stop out over here. This volatile market is nearly impossible to trade because the entries here, stop loss is below this low. I'm not able to do that. It's gonna be 56 handle, something like that, 44 handle. I'm not able to do that, so I have to take the minimum risk around this area, just the minimum risk. Who actually asked me about the 22 white model? Now this is the 22 white model. Again, the sell buy has gone because the bullish PTRA has been broken already. See this bearish entry over here from the 22 YT model. Stop loss has to be here. Target can be this sell side liquidity. Can you do that? I can't do that. So what I can do, I can minimum put my stop loss around this area. That should be the minimum area I can put my stop loss over here, which is still 26 handle. So I'm not able to do that. Now this is a valid 22 YT model where liquidity has been created. Bullish PTRA has been broken. Market has more interested to fall for this sell side liquidity by trading this new week opening gap. If you'd love to take the entry over here, your stop loss has to be at least above this high or above that high. At least above that high or that high. The lowest area is here, which is still 26 handle, something like that. If it build a gap here, for example, it has built the entry gap around that area, my entry can't be over there anymore. My entry has to be from here, and I have to cover that breakaway gap at least. That's gonna be 45 handle. Can you do that? If you can do that, go for it. I can't. I don't have any word to say about that, because now this is a very valid selling opportunity. Until now it was bullish setup. When this candle closed, new opening gap has been traded. I was thinking it will go through all of this area and take that buy side liquidity. It didn't do that. Come here, reacted, come back again to this new week opening gap. Now entry gap, see this entry gap, the entry should be from this entry gap here. If you can take the entry here, and your stop loss has to be at least there, at least over there. Your maximum target can be this sell side liquidity over here. If you can take it, take it. Even there is an opportunity, you'll get possibility you'll get stopped out over here. It is the best or safest area to put the stop loss. 75 handle. So if I take here, this buy was absolutely shit because I didn't notice that it has tapped to this new week opening gap. I was not looking over there, whatever. So if I take a buy here, sorry, so two loss is kind of 27 handle, 27 handle, 54 handle loss. Okay, so after taking two losses around this area, I will go for that last opportunity to take the sell from this gap over here, and will hold my trade until this sell side liquidity and then that sell side liquidity. Okay, both of them. My minimum stop loss has to be here. I'm not able to do that. I'll just put it here. It is also 34 handle. I can't do that. So what I will do, I'll try to take my entry here around this area, and then try to put my stop loss over here, which is still 39 handle. What should I do? I should let this go. If I don't want to let this go, I can maximum take the risk until here. That is the maximum risk for me. 2700 because it is highly volatile. So from the 50%, to here, then the sell side liquidity. There's a high probability that it will tap to this gap and then it will keep falling. It will never reach until the 50% of this gap. As this first presented gap, sorry, I have the opening gap here. Let's see if it can reverse a bit and take me from the 50% or not. Still, I'm going against the new day opening gap. It is also a new day opening gap. So this whole area, if I go for the buy or sell, they are all going against the new day opening gap. A very low probable area to trade. Until here, okay, not that one. I'm so sorry about that because I didn't notice that it has tapped over here. I just didn't look at that. I was looking 1 minute chart and I was looking for the buying opportunity only. But I have seen later, I have seen that it has tapped here, first closed below this new week opening gap. I didn't notice that. I was just thinking that it will close above that area, whatever. And then it has reacted from there. Now it fall. Okay, so that will be my entry from here. Now I put my stop loss over here. Remember, this is a very tight stop loss. My stop loss has to be at least there or there. I can't do them because of the huge volatility. So what I'll do, maximum I can risk until 25 handle maximum. So that's all I'm trying, if it can work like that way or not. So from there, because if I take a loss here, 27 handle, 27 handle, 25 handle, still I'm okay. But if I take 50 handle risk by one trade, no, I'm not interested to do that. So here I have already 54 handle loss, right? 27 handle, 27 handle, 54 handle loss. So I will go for the 54 handle partial. So I'll try to take that partial around this area. If it give me that 54 handle, I'll go for exactly 54 handle partial, as it is highly volatile. Otherwise I wouldn't go for that 54 handle partial. But remember, here my stop loss is very tight. I have covered the lowest PDRA, the 50% of that breakaway gap. That is the lowest PDRA. So if I get stopped out here, I will have to wait for the re-entry opportunity. But I can't put my stop loss here for 68 handle. No, I can't do that. So I'll take that risk until, sorry, here. I got stopped out here. What can I do, brother? Nothing. First of all, I'm going against the new day opening gap. Secondly, I'm not able to put my stop loss in a logical level where I should put my stop loss. So I'm all trying to cover the gaps, as it is highly volatile. If it is I am lucky, 100% lucky, and market is not going for the liquidity area, I'll be happy to get that boom. Otherwise, I have to let this go. I can't trade this market at all because of the highly volatile. As well as it tapped here, which is the new opening gap, respecting from there. Maybe it will respect until here, then it will fall again. Nobody knows that what is going to happen. It will go through this, it will trade here. Nobody knows what is going to happen. This whole zone is highly risky to trade from here to here. This is the zone is highly strong to be traded. When which one is going to be respected, nobody knows that. Here it has been respected here, then this candle respected this gap, then this candle respected this gap, it is respecting now this new opening gap. All of this new opening gap, which one is going to be respected when, I don't know that. So this is why this is really important to understand that this is a low probable area to trade. Can I think about the buy? No, I can't think about the buy. I can think about the buy if this candle can close above this gap again. So here I got stopped out here. If for example I would love to trade more, then I have to look for the again the sell while this market will close below this entry gap, because I know that my stop loss has to be here, which is above the liquidity. I'm not able to do that. I got stopped out prematurely around this area. So this will close below this area. I'll try to take the re-entry again. Okay, which is absolutely shit again, because if you try to frame the sell here, you are going to go against the new opening gap. Highly risky. The more you will put above the stop loss, for example here, the less it is going to be high probability. Either you will cover the 20 handle, 25 handle. 25 handle is okay around the highly volatile area. Either put it here by covering your stop loss 20 handle, 25 handle, or you have to put it here. In between here, they are absolutely shit, because like it can simply take this high, this gap high, that high, and fail to take that high. So this whole area is the low probable area. So either I will try to take 25 handle as it is highly volatile, otherwise 20 handle, or I have to cover this one. So if you'd love to put a bit bigger stop loss, it has to be here. Bigger stop loss is the here, but smaller stop loss, the lowest one is 25 handle. That is all. And please remember, every kind of trade in between this zone is low probability. Any kind of trade, because I'm going against, anyway I'm going against, like I would love to take a buy here, I'm going against the new week opening gap. I would love to take a sell here, I'm going against this new opening gap. So when this market is trading in this type of zone, it is always low probability. And if it is highly volatile, that means you are in dumb. For example, you would love to take the buy from that order block. So what you have done, you have taken the buy here, which is here. Your stop loss has to be 2 tick below this order block, which is 50 handle. Fortunately it worked, or it went higher. It is your fortunate. But if it wouldn't do that, you would get 50 handle loss. So if it is highly volatile, you should not trade in that area, at least not with your funded account. So come back again to this new week opening gap. Hope it will hold the market. Look at this trade. Is it really possible? I don't think so. This is a possible trade. Like here, 94 handle stop loss, 107 handle target. Can you do that? I can't do that. So in this type of situation, always re-entry is better. I mean, take a loss, 50 handle loss, something like that, 25 handle loss from there to there, something like that way. You'll take a 25 handle loss here, and then you will wait to see if it can close below this area. Take re-entry over there. Now no buy is valid, only sell is valid because it has broken below this new week opening gap. This new week opening gap is now respecting as a sub, as a resistance. At the same time, it is respecting that new day opening gap, which is this two blue line. It is holding the market, sending it higher. Low probability, but sell is more logical. Until here, the buy was valid. Then when it has respected that new week opening gap, sell has been more validated. And this 22 IT model is one of the best 22 IT model. Again, I'm not able to put my stop loss above the sell side liquidity. That is my problem. But the model is so beautiful. Of course, today is the gambling day. I agree with you, brother. No, no objection. I mean, because of the volatility, I mean, you can see the volatility now. It will close below this entry gap. It is also valid sell again from here. Now, I will just keep marking them and will show you the PTRS. Okay, here. Would love to take the entry around wherever this candle will close. I have to push the button. But I'm just because of the volatility. Okay, so until this area, it's gonna cost like 21 handle. Until here, I have to cover. I have to cover this gap. There is no other way. I have to cover that gap. Which candle has built this gap? So this entry from here to here, this should be the entry, this should be the stop loss because the liquidity has taken over here. If I would love to take the re-entry, I have to cover this gap. There is no other way. So let's just put it in a logical way. Okay, let's see if it works in a logical way. If I put my stop loss, then it works or not. I have to cover this candle which has built this gap. So then it will be a re-entry here, re-entry over there, and again same kind of partial, 50 handle partial, something like that. Hold my trade until this sell side liquidity. Now please don't do that. 44 handle partial, I mean sorry, stop loss is huge, brother. It's always huge. Please don't do that. I need the speed now. There should be some kind of speed. This should work as a breakaway gap. If I take the buy here, for example, if I take a buy here, where should be my stop loss? Below this order block. Just one tick below this order block. That will be a losing trade. One trade is a losing trade. Just think in a normal day. Just in a normal day, I'm going to put my stop loss exactly where I should put my stop loss. So there is no condition to take re-entry. By the way, that re-entry is not valid at all. So maybe I am in this trade and I got stopped out here for the first time. After I get my stopped out over there, I took re-entry over there. Exactly over there. I took re-entry. Stop loss is over here, target is there after taking the partial. No re-entry, because that should be the logical level to put the stop loss. Just 2 tick above that high which has cleared the liquidity. There is nothing called re-entry. The setup is good. The buy didn't work. Perfect. I'm okay with that. But the sell has been confirmed that you should take the sell. So it has been confirmed. You have put your stop loss in a logical level where you should put your stop loss. You will never get stopped out. Here you got stopped out, one losing trade, then you are going to take one winning trade. But unfortunately, we can't do that. Like 91 handle risk. Can you do that? I can't do that. Here, how much was the loss? 44 handle. I can't take that 44 handle loss. So this is why this is really like highly risky area to trade because of the volatility. You are not able to put your stop loss. For example, I am in this trade, just in this trade. Where should be my stop loss? At least here, at least over there. 21 handle. Now maximum 26 handle or 7 handle. Putting the stop loss here is absolutely valueless. Why? Because I have to either put it here or just above that candle where I'm going to get the entry from this area. Okay, so the lower gap at least here. So I will better put my stop loss above that high, not going to put it here or here, because this is useless. If this market really would love to come to this breakaway gap, there is a high probability it will trade the 50% of this gap and then stop me out over there. Okay, weak can did the stop out over there. It just weak can pop up. I got a stop out. So either I have to put my stop loss here or I have to put my stop loss here. At least this gap should be covered. So I will try to take this sell like this way. If it works, perfect. I'm going to get my boom. If it doesn't work, I'll just get another loss over there. The logic is very simple. Re-entry, order block, stopped out from putting my stop loss around 20 handle, got stopped out, will take a re-entry, but this re-entry is not valid because market actually reacting from this new week opening gap. I didn't notice that, to be honest. But here I'll take my entry over there, got stopped out here, maybe 25 handle or something like that, and then I will take re-entry over there, again the re-entry over there by putting my stop loss over here. For the first time I'll get the partial, I'll move my stop loss to the break even. Now you can say that the price is not good. Price is good, but the problem is it's highly volatile. Price is good. It is reacting with the setups. This is a really so beautiful 22 YT model, but the volatility is huge. So I can't put my stop loss around here. I'm not able to do that. So what I will do, I'll put it just one tick above this high, just one tick above that high. So if it really would love to trade this gap, I'll get stopped out over there. 21 handle, I have to take that risk. Otherwise, I will not push the bottom. Simply, I will just not push the bottom. Okay, fortunately, it has closed below the new day opening gap. You can see here. This candle has new day opening gap. That is a okay. As it has closed below candle, until that candle, I was not confident. I was not confident that it will keep going higher or not. But after seeing this candle, I'm pretty much confident this is going to fall, because it has closed below this new day opening gap. So there is a high probability now it will keep falling. there is going to be the re-entry from this order block. This is one of the best order block. Now it will close below this order block. Okay, maybe I would love to take the entry from this order block, just from that order block. Where should be my stop loss? At least 2 tick above that order block, which is 29 handle. I can't do that, so what I will do, I'll cover the mean threshold of that order block, the 50% of that order block. If the body close below this order block, then target is here after taking the partial, wherever the partial. So first this candle will close 1 tick below this order block. It is going to be validated as an order block. I'll put my stop loss just covering the mean threshold of that order block and then hold my trade until here. Sorry, around this area. Okay, see, fortunately if it doesn't stop me out here, because I'm not able to put it above this high, it is gonna be 28 handle, huge stop loss for the order block and huge stop loss. So I'll take the minimum risk. I have to take the risk, so I'll take the minimum risk, which is until the mean threshold of that order block, the 50% of that order block. That is called the minimum threshold. So if I take, for example, I'm taking all of these trades. I took a buy here. Please, this buy is not valid. I don't know you guys believe me or not. I really didn't notice that it has tapped over here. It has closed below this new opening gap. Tap here. I was not focusing over here. Nothing. I was just watching this 1 minute chart. So I was clearly waiting for the buying opportunity around this area. I didn't notice that. So this buy is not absolutely valid. This sell is valid. So 1 loss, 2 loss. Maybe this is also loss. For example, just for example, this is also a loss. I'll try to take re-entry from this order block. Fortunately, it didn't stop me out. I'm happy. See here, this order block, I will take re-entry over there from this order block. Will put my stop loss just by covering the mean threshold of that order block, the 50% of that order block. So you can see here, my stop loss is just above the mean threshold of that order block. Just the mean threshold of this order block. Around here, okay. Now I am showing it here, but partial can be like 25 handle as it is too volatile. So you can, yeah, like here until here, this partial is written over there. Think like that way, 27 handle partial. Okay, so just keep it simple, make it until here partial. Why did I put it here? Because putting stop loss here is not possible for me. 28 handle, so 20 handle, which is here, it is absolutely illogical to me. If I have to take the minimum risk, then why I'm going to take that risk? Instead of that, I'm going to take the risk until here by believing that this mean threshold is not going to be broken. Okay, so this is my logic over here. If I go for this buy with like 26 handle, 7 handle, that buy is not valid. We'll take another 27 handle loss. Then we'll take this sell again, re-entry from this gap, re-entry. And this entry where I'm showing it from 22 white model. If you forget about 22 white model, do you remember I showed you another setup yesterday? Another thing, do you remember guys, this setup, this thing, do you remember? Anybody? I'll take the partial here, we'll put my stop loss to the break even, will, or the this one will the break even. We'll expect that there will be some kind of unfilled gap. If there is an unfilled gap, this sell side liquid is going to be clear with so beautifully. If there is a gap, I don't know it is going to make any gap or not. If there is a gap which is going to be an unfilled gap and it is unfilled, you will see a falling knife. Immediately after that, you will see a falling knife. I'm just not sure it will make any gap or not. If it make any gap, and that gap is not closed by the next one or two candle, you'll see the falling knife. Just next one or two candle, if it doesn't close that gap, wait for the fall, dramatic fall. So for example, here the thing I was saying, one loss 27 handle, one loss 27 handle, got that run, 56 handle, okay, something like that. 56 handle partial from that re-entry from there, okay, from this gap, re-entry from that specific gap from there, okay. So the re-entry from that gap is going to provide me like all my loss is going to be mitigated over here. All the losses is going to be mitigated. I have taken here one loss, here one loss. Please don't forget, just forget about that re-entry. It's not valid. I didn't notice it has traded this gap. I keep repeating these things. So one loss here, one loss here. I will take re-entry over there, re-entry over here. Now I don't like to switch my bias. Here I was extremely bullish because it was respecting the new week opening gap. When this candle has closed below this new week opening gap, I didn't notice that. I promise you, brother, I didn't notice that. If I have noticed that, I would never frame the buy. So it's my mistake. I'm extremely sorry for that. But yeah, even if I frame this buy and I got stopped out, I'll take the same entry here. I know that I'm not able to cover this high. So I'll take a minimum risk. Got stopped out? No worries. I'll take re-entry over there. I missed this re-entry. I'll take the re-entry from this order block because this is one of the best order block, and we'll take the very small risk over here, and then we'll hold the trade until the sell side liquidity. Now you can see here this candle failed to close this gap 100%. Next one or two, three, within one or two candle, it is going to take that liquidity. Just by like two to three candle, this is going to take that liquidity. See, this gap is unfilled here. Next 2 to 3 candle is going to take that liquidity. Just 2 to 3 candle. This is called falling knife. This market will never give another opportunity to take this fall. You are making things complicated, brother. You say no such thing as re-entry, and then you can take re-entry. So when re-entry works, it's fine, but it doesn't work. There's no such thing. What do you mean by that, brother? I think you didn't get my point. Okay, let me clear one more time. Order block. First of all, this whole area is not for trading. Can you take this trade? Go with the logic. It's easier for you guys actually to understand this logic. This order block entry is not valid. First of all, it is not valid. I'm extremely sorry for framing this on, but as I have framed that, so I'll explain this on. This is your entry. Your stop loss is below that order block, 2 tick below this order block, just below this consecutive order block, and target the buy side liquidity after taking the partial, wherever is your partial. Then you got stopped out over here, right? You got stopped out over here. Exactly over there you got stopped out. Perfect. You don't have any re-entry opportunity over there. Why? This order block low has been cleared. No entry is valid. There is no re-entry around this area. Simply no entry. Market has closed below this new week opening gap, took the liquidity, gave you the 22 YT model, entry fair value gap, breakaway gap. So you have taken another entry over there. Stop loss above that order, above this line, just above this line. Target is here. After clearing the partial, let me remove all of these things. I should not actually show you the setup. I should not do that. Instead of that, I should do these things because you guys don't get confused. So here, the buy, you got stopped out. There is no re-entry opportunity. There is nothing called re-entry. Not simply nothing. No re-entry. Forget about re-entry. Go with the logic. You took the entry from the order block. Your stop loss is below this order block. That is the logic. Here, market has cleared the liquidity. Market structure shift, fair value gap, entry gap, entry fair value gap. Forget about all of this order block. Nothing. There is no order block. Nothing. I just try to break this down for you guys, but you don't actually need that. Okay, no problem. Okay, so here entry gap, you took the entry here. Where should be your stop loss? Above this high. It should be above this high. Okay, no, nothing. Here is your target. Take the partial, put your stop loss to the break even. Wherever the stop loss you should put, you will put your stop loss to the break even. So 92 handle, try to take the partial around 92 handle. Where is 92 handle? At least 1:1. So when you will be able to take the partial here, then you will put your stop loss to the break even, and then you will target the sell side liquidity. There is no re-entry. Simply there is no re-entry. There is no re-entry opportunity. Re-entry opportunity is comes when you are not able to put your stop loss above the logical level. So here this is the logical level. You are not able to put it over here because of the stop loss, 92 handle stop loss. Then there is the point come about the re-entry. Hamad, I need you to listen this very carefully, okay, brother? Because you have asked that question. So I have to reply you. So for example, here, this buy, I would love to avoid it because I just came here, opened my stream. I was not exactly ready. To be honest, I didn't notice this 15 minutes or everything, nothing. So even if I would love to go for here, just for here, stop loss below this order block, did you put it here? Okay, now you got stopped out by that candle, right? So when you got stopped out by that candle, what is the logic? If the body closed below this order block, this order block is invalidated. There is no order block re-entry. That means there is nothing called re-entry. Put your stop loss to the logical level and then hold your trade for the liquidity. I hope that this is absolutely clear to you. Okay, so I'm going to remove both of them. Now what happened? Let me remove them. This is highly volatile. Okay, so for example, you took the buy here, the buy is here, and you covered the stop loss by the mean threshold. Okay, and because of the highly volatility, so you got covered and got stopped out over here around this area. What you are watching this low, order block low. Did it clear that order block low? No, it didn't clear that order block low. That means you will have an re-entry opportunity. By the way, this area is not good to take re-entry. It's not good to take re-entry. Reason, this candle closed below this new week opening gap. This candle trade this new week opening gap. So see this high, it has actually traded this new week opening gap over here. So absolutely there should not be any re-entry or rebuy because it is closed below this area and then respecting this area. So there should not be any rebuy. Forget about that. You are looking for the re-entry. So first candle, this is the candle that has closed above this order block after stopping you out. What you are seeing, did it close below this order block? No. So you are looking for the buy. Still the buy is valid. Why? Because the logical level did not be traded by the candle. When this candle has closed above this order block, you will try to take re-entry exactly after the closing. Wherever the candle is going to close, it will take here and you will again put your stop loss covering that mean threshold or whatever it is you have covered first time. Go for the partial, something partial, and then hold your trade as long as you want by putting your stop loss to the break even. This is that order block, but this is not valid. Now here 22 YT model, market has cleared this liquidity around here. Okay, so market has cleared that liquidity. As the market closed below this gap and retested this gap, you are going to expect that this is going to fall for this sell side liquidity. That buy side liquidity is not valid anymore. So you are more interested to think about the sell side liquidity. Same logic. Market structure shift, fair value gap. Where should be your entry? From this fair value gap, right? So what you have done, you have taken an entry over there. And as you can put your stop loss above here, as at the first time I shown you. If you do that here, with that logic, maybe you will take a loss and then you will take a win, something like 1:1, something like that. But as I'm not able to do that, so what I will do, I'll put my stop loss maybe 21 handle. So I put the stop loss over here because of the volatility. So if I'm wrong, if this market just simply tapped to this entry gap and then fall, if it doesn't do that, I don't want to miss the trade. So I did this entry and I got stopped out here. Okay, I'm absolutely okay with that. I will wait this market to close below this entry gap again by seeing that this high is not taken, because this is the origin high or the liquidity taken. After clear the liquidity, market structure shift, fair value gap, right? So it is going here, going here, going here. How far it can go? Maximum until this high, maybe 1 or 2 tick above that high. Nobody should close above this line. Then fall, closed below this entry gap. Wherever it has closed, the next candle will open, I'll be in the trade. Again, we'll put my stop loss. like 21 handle or 20 handle, whatever it is, okay, going to support. For example, just make it to a 20 handle. You will take the entry over there. You'll go for that sell side liquidity after clearing some kind of partial. So maybe you have taken the partial here around this area. You took the partial, put your stop loss to the break even, and you are holding your trade here to the sell side liquidity. This is the area where the re-entry is coming when you are not able to put your stop loss in a very logical level. This is the area you have to cover by your stop loss. So if you would love to take this trade, you don't want to take any losing trade, okay? So in that type of situation, then put your stop loss in the logical level. That is the logical level. You have to put your stop loss above the liquidity taken area. So I didn't say that it didn't work, so you should not take the re-entry. No, it's not like that. It's something like you can't put your stop loss below here. It's an illogical level. This market can simply trade this whole area until this high is not taken. This is very logical level. Why is that? Because maybe this market is coming for the 786, that means ICT's optimal trade entry zone. Maybe it is coming to that optimal trade entry 786 area, maybe 612 area, I don't know. So if you are not able to put your stop loss here, either don't take the trade or try to take the trade and put your stop loss whatever your highest stop loss is. Do that. If you get stopped out, wait for the re-entry opportunity. If your bias is good, for example, here I got stopped out here. I don't want to take re-entry after seeing this logical level. Unfortunately, I was not seeing that. Okay, so for example, here I took the entry. Okay, one loss, two loss, 28 handle, 28 handle, 56 handle. Then I took another loss, 21 handle. Perfect. I took three loss. Then I will take one win for the sell side liquidity over here. But here, actually, if I trade, I'll take this buy. It will be a losing trade. I wouldn't take that buy as well because this candle has first closed below this new week opening gap. Until it is above this new week opening gap, it was valid. When it has closed below this new week opening gap, it was not valid. To be honest, it was not valid. Whatever. One loss, two loss, then I'll go for this trade. I'll get my huge boom for near about 106 handle. It will give me 106 handle. So I'll get my huge boom after clearing the partial, putting stop loss to the break even. So here, if you'd love to look for the re-entry, then you have to understand that your stop loss is smaller. You are not putting your stop loss to the most logical level where you should put your stop loss. Where did I put my stop loss here? Absolutely illogical level, right? By thinking that it's not coming here. Now next time, why it works? First time market actually went until those type of things where it has to trade. Okay, maybe it came high here one more time to trade this new week opening gap before falling. Just because of that, then this market come here to trade today's new day opening gap, and then it is going to fall for this sell side liquidity. In the meantime, it has closed below this new day opening gap. That is a confirmation, brother, I'm going to fall, I'm not going higher anymore, and then it is coming for this sell side liquidity. Do you understand, Hamad? So you don't want to take re-entry, then put your stop loss to the level I told you to put. Liquidity taken, market structure shift, cover that high, which is the liquidity taken area. At the same time, I showed you the order block here, which is one of the best order block. This is the order block. Now, why this one is the order block? This is not the order block. Actually, this is the order block. That candle low, see this candle low, it is below this entry gap. So if you mark this candle, extend it on your right around here, that has been traded by that candle. See this up close, body close candle here. That is the real order block to this 22 YT model. This order block is the real order block. Market fall, retest this order block. Now this is my propulsion block here. That is the propulsion block, and look how many times it is respecting from this propulsion block. I was looking for an unfilled gap here, but market actually fortunately closed this gap. It is something that will help me to understand big fall or kind of this type of consolidation fall. That means it will fall and take that liquidity. There is nothing wrong with that, but it is not going to be like a big fall. It will just do this type of consolidation, 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 and then it will take this sell side liquidity if it doesn't build this unfilled gap. If it build this unfilled gap, you will look for the falling knife. I hope that point is clear to you guys. Whenever for the first time it will make the unfilled gap and 3-4 candle, 2-3-4 candle, okay, just leave that area with speed. It will leave that area. you will look for the next sell side liquidity level. It will keep falling for that next sell side level. Okay, so here if I get loss here, like one loss here, two loss here, I'll get that huge boom over here. So my point is 20 handle loss, 20 handle loss, 40 handle loss. Okay, I'm good with that. Now I'm going to take a partial around 20 handle and will hold my trade for on 100 handle. So my loss is going to be mitigated and I'll be profitable. But I'm not interested to put that huge loss where I'm going to get 50 handle loss. Okay, so here maybe I put my stop loss over here for the first time, 43 handle, and then I put my stop loss here for the here. Okay, so both of them are losing trade. Buy anyhow, both of them are losing trade. What is going to be my loss? 150 handle. I'm not interested to do that. Instead of that, what I will do, I'll go for 20 handle loss, 20 handle loss. Now if you are not allowed more than two losing trade, then you are done. Then you will just let this go. You are not going to take anything over there. Simply you are not doing anything over there. If you are allowed three, maybe three, so you will take one more trade. In this type of volatile area, don't trade. Simply just don't trade. Simply just don't push the button. Because you have to understand that you are not able to push your button, put your stop loss in the logical level. Can you do that? If you can do that, you will never get stopped out. Look over there. Never ever you will get stopped out. Never stopped you out. I can't do that. Ahmad, you are not new here, okay, brother? I can see your name long time ago, so you are not new here. So this question I really expect from someone who is very new here. The question you have asked me, it's a very shit question, brother. Because I have already talked a lot of times. If it is highly volatile, don't take this trade. Just simply avoid that trade. Don't take it. If you can't put your stop loss to the most logical level, don't take that trade. It is very simple reply, brother. Now if I don't do that, I won't be able to frame not even a single trade here. See this, just look at this run. It came here until here, didn't clear this liquidity, built the obvious liquidity, right? Then 1, 2, 3, 4, just 4 minutes. Just 4 minutes, okay? 1, 2, 3, 4. This 4 minute has provided you 100 handle. In a account, you took one contract entry, just one mini contract entry. You are in a cell here. Just think like that. You are in a cell. Sorry, not there. You are in a cell over here from that area, and your target is here. You didn't take the partial, for example, and you put your stop loss to the break even. You have seen that near about $2,000 profit, near about $2,000 profit, and within just 4 minutes, your all profit is gone. This is the problem if it is highly volatile. This is the gamble table. We have talked about this a lot of time. If this is the gamble table, if the can is it is highly volatile, you have to go to your 150k account. You can't use your 50, 25k account, 75k account, 100k account. No, you can't use them. Your maximum loss is $2,000, so you can't use them. This type of highly volatile day, you think about like it is the day to make the money. No, it's not the day to make the money. If you are using 50k account, it's the day to lose the money, to blow the account, because you will never be able to put your stop loss where you should put it. You will never be able to do that. think about other days. That is the 22 YT model. Okay, so if it was a normal day, we would take the entry here. Our stop loss is above this liquidity, which is 20 handle, maybe 22 handle, something like that. We have taken a partial around 1:1, that means 20 handle, so something like that. We have taken a 20 handle partial here, put our stop loss to the break even. So after getting our partial, got stopped out to the break even, we are profitable in a normal day. But in this type of situation, I can't put my stop loss here. I can't risk everything, all I have. Now you can say, brother, I will take just two micro contract entry, just two micro contract entry. Still, two micro contract is $4, and it's gonna cost like $400 if you are wrong. So if you see the highly volatile area, you always have to skip those days. It's not the days to make the money, it's the days to lose the account. Okay guys, I would love to talk about a bit here, and then I'll close my stream. I was actually late today, but I wanted to say, let me talk about that. Those people who are thinking about the all-time high, don't think about that all-time high. It is not possible to go to the all-time high until it reaches to this area. There is still possibility it is more interested to fall and take this sell side liquidity. I'm not interested to look for the all-time high, and I'm really disappointed. I'm fed up with quarreling with you guys because it's really so difficult for me to hold your bias by taking the responsibility. I can't do that. So if those people doesn't believe me, you don't need to change your bias. You can think about the all-time high. I don't have any problem. Here, this is that daily gap. That gap high has been, that means this CB, sell side imbalance, buy side inefficiency, has been absolutely completely filled. It is perfectly balanced. There is the buy side delivery, there is the sell side delivery. This is why this is the week. It has been successfully balanced. At the same time, you can see there is a week. So the highest week, you can use that week for the quarter level if you want. This whole area is a new week opening gap. So you are seeing the sell side liquidity here. It's not the real sell side liquidity what you are seeing, okay, like clean lows or whatever you are seeing. It's not the real liquidity because it is inside the new week opening gap. So if you see the sell side liquidity or relatively equal highs, relatively equal lows inside a new week opening gap or new day opening gap, they are not the kind of liquidity that market is going for, because it has traded the liquidity zone and then build the liquidity. Later when it is going to trade that liquidity, nobody has no idea. So from here, the weekly analysis video, I told that if it doesn't open like this way, I wanted to see a lower open like here. If it would do that, this bullish gap would be broken and it would go outside of this candle. But when it has closed inside this candle, I just told that it's gonna be an indecisive week. That means if you go to the weekly chart, you will see a weekly candle that is going to be a very small body, long week. You are going to see that type of candle that this specific week, because after a big fall, market need to stop. This whole month, sorry, the whole week, market is actually in ranging. You can see all of these candles are the sideways candles. They're sideways candles. It is ranging inside a zone. It's not moving higher, it's not going lower. It can't do that. For example, by the way, this is that hourly gap. I predicted that it is going to trade the 50% of this hourly entry gap. It can never reach to this last gap. If it come to this last gap, it means that it is going to make that all-time high. So I can't think about the sell anymore if it go to that last gap. If it come to this last gap, I am done for thinking about the sell until the next case of scenario. I will start to look for buy. Any kind of bullish period, I'll start to look for buy. Every day my bias is bearish, no buy. Okay, just I'm more interested to look for sell. From 15-minute chart, this is that entry gap. If you mark that entry gap from 15-minute chart, this is the entry gap, this is the last gap. So I would love to mark the entry gap around this area, extend it to my right. First, this market came here inside this entry gap, traded the 50%, then one body has closed above the entry gap, the next body has closed inside this entry gap. It is still holding the market. It is called the fake breakout. That means if you go to your hourly chart, you'll be able to see there is a wick. Okay, just wick. No body has closed above this area. So it is called the fake breakout. From 15 minutes at one more time, entry gap is holding the market as well as that bearish CB. The CB from the daily chart. Daily CB is holding the market. Markets hold this market and then send it lower. This is the sell side liquidity. I'll show you in a moment, but before that, here I have marked a buy side liquidity from yesterday, actually not from today. So if I go to the 1 minute chart, you'll be able to see that this is the highs I have marked over here. They are the very clean highs, kind of exact highs, something like that here. Okay, this high and that high, they are the exact high. So today my intention was to look for this liquidity to be taken first, that exact high will be taken first, then this market will fall. I was not in front of my chart, to be honest, so I didn't know that what happened around the morning session or 9:30. So my interest was to look for the buy for at least this clean highs to be taken first, and then it will fall. When after seeing this run around the morning session, okay, so around the London session, when this market went higher, then I was interested to see this will be taken, because overall I'm bearish, I'm not bullish, I'm bearish. So I wanted to see this liquidity will be taken first, then this market will go for the sell side liquidity after seeing this run around the London session. So I was in front of my chart until the London session, and then I just moved away from my chart. Okay, around 9:30 it left that clean lows around here. I didn't notice that, by the way, first at first. So around 9:30, this is that 9:30. I'm more interested to look for buy. Any kind of buying opportunity, I'll take that buy. So this market went higher, came here. This is the area I'll look for the SMT. If there is any kind of SMT, I'll come here with the ES to look for the SMT. Do I have the SMT around this area? Now, if you see this low and that low, they're the relatively equal lows. There is no SMT around this area. Simply there is no SMT. That means any kind of buying opportunity here, I'm not interested to take any kind of buy around this area. No buy is valid. Instead of that, it left that sell side liquidity all the day. It is going higher. I'm not interested to look for any kind of buy all of this area. Finally, when this candle from 50-minute chart has closed above this new day opening gap, okay, and came here, more importantly this new week opening gap, it is much more stronger comparing with this new day's opening gap. As I have all of this new day opening gap, this is the lowest area, lowest probable area to trade, because which one is going to be traded when, nobody knows that. So when it has closed above this area, I'm more interested to see it will fall to take some liquidity, then it will give me a 22 YT model or kind of order block trading opportunity to go for this buy side liquidity. That is why when it was falling, I was looking for this gap over here. That was the gap I was looking for. Market will come here, take that low, it should go from that gap to that buy side liquidity, which is this clean highs, and later market has built another buy side liquidity with that high, this high and that high, another buy side liquidity. More interested to look for that buy side liquidity. Now this candle, when it has closed below this new week opening gap, I can't think about the buy anymore, because the main theme was to look for the buy. Why I was giving the priority to this new week opening gap? But because if you watch this whole zone, one new day opening gap, new day opening gap here, this is the new day opening gap. This green line is the new day opening gap, today's new day opening gap. New day opening gap, new day opening gap. All I have the new day opening gap except one new week opening gap. Even this is all very tough to trade around this area, because when which one is going to be traded, nobody knows that. As you can see here, this new week opening gap, if I mark that new week opening gap, you'll understand that fact. So here to until there, see this new week opening gap on my right hand side, mark this new week opening gap. This new week opening gap is aligned with this fair value gap. So on my mind, it will come here to this new week opening gap, and then it will frame a buy here for that buy side liquidity. I was focusing over here. I just was a bit late. I was not able to cover these two chart altogether. It was in my mind, it will come here above this new week opening gap. I'll look for the buy for this buy side liquidity. When it has closed, this candle has closed below this new week opening gap. What do I have on my chart? Here, clean lows, here clean highs. Both of them are clean. Market was very near to take that clean highs, failed to take that clean highs, closed below this new week opening gap. I'm done to look for buy anymore because now it is below this new week opening gap. I should keep looking for sell until the body again closed above this new week opening gap. When the first time it will close above this new week opening gap, I'll look for that clean highs again. At the same time, if you go for the range range liquidity, something like this here, okay, so you have the clean lows here, you have the clean highs here. This is the clean highs. You see this 50%, this 50% is aligned with this new week opening gap. Not exactly, like not exactly same area, but this is the only thing I can use over here because I don't have any bullish parabolic gap from 15 minutes chart, nothing over there, no bullish parabolic gap, nothing, simply nothing. So this is that range, I mean range 50%, this to this. Let me actually use it as a 50%. This is the range. Which one is going to be taken first, buy side liquidity or sell side liquidity? I have to decide it depending on that fair value gap which is aligned with this 50% range, 50% area. Okay, so until this market is above this gap, I'm more interested to look for buy. When this market is below this gap, I'm more interested to look for sell. When I have framed that buying opportunity here, that was absolutely my mistake. I shouldn't do that. I just didn't confirm the things over here. Okay, unfortunately I was, see this water block, this is my sell from this water block, again from that water block, again the sell from that water block. By the way, just let me finish these things first. So finally when this market came here, I have seen that it has traded this nude opening gap. Okay, there is a very small gap, you can see here this nude opening gap. It came here to this nude opening gap. This was the highest up close body close candle. I was trying to take the buy from here. I was going against this nude opening gap, exactly to this opposite of this new week opening gap. I should not take the buy over here. You know the rules. No trade is valid while the market is just below this new week opening gap. No buy is valid. When the market is just above the new week opening gap, no sell is valid. So if I would love to take the buy here, it is perfectly a perfect gambling, because from here to here it's a range, it can be respected and then it can keep falling. What happened here? Market has cleared that liquidity one more time. After clearing that liquidity, kept in the market structure shift, fair value gap. That is my selling opportunity now. I have to be careful about this area because I'm trying to frame the sell here, right? Around this area. So I have to take a partial to the top of this new day opening gap around this area. After taking the partial over there, then I can hold my trade until this sell side liquidity over here. So that is why I was framing that buy, which was absolutely a bullshit idea. I shouldn't do that, to be honest. But after that, that was the selling opportunity. Again, I can't take that sell as well because of the huge volatility. So if I would love to take that sell, it has to be 93 handle stop loss or something like that. I'm not able to do that, to take that type of 93 handle stop loss or something like that. Otherwise, if it was a normal trading day, I would get a 20 handle 1:1 partial, and then maybe I would get a stop loss to the break even. Come until here, didn't take this sell side liquidity, it will close above this new week opening gap again or above this gap again. There's a highly probability it will take go for this buy side liquidity first because this is the range. So it went above this range fair value gap 50%. It has more interest to look for that buy side liquidity. If it failed to take that buy side liquidity, it will go a bit higher and closed below this new week opening gap again. I'll look for the sell again. There is no opportunity to look for the buy again. So I can't take the buy to this deep discount, I can't take the sell to this deep premium depending on this gap, because market left both sell side liquidity, both buy side liquidity. Nothing is been cleared from this chart. Nothing is been cleared from this chart. If you ever see this type of highly volatile area, skip trading. Don't trade this highly volatile area. I didn't not even push a single time to my funded or challenge account. I didn't touch it because it is highly volatile. In this highly volatile area, don't push the button. You will never be able to put your stop loss by covering some logical level. It's nearly impossible to cover them. So please don't push the button if you ever see this type of highly volatile area. As well as if you have the both buy side and sell side liquidity, sell side buy side liquidity, if you have both of them, try to use the range liquidity 50%. That means this liquidity to that liquidity, mark it by the fib. Okay, so from this liquidity to that liquidity, mark the 50%. Mark any kind of bullish parabolic from your 15-minute chart. Try to mark anything which is aligned with this gap. So it doesn't need to be exactly to this line. Either it will be a bit higher or a bit below. If you have both of the gap, like above this line there is a gap, below this line there is a gap, then you will look for both of this gap. Okay, so until this market is above the both of this gap, you are bullish. When this market is below this both of the gap, you are bearish, something like that. As I have just only one new week opening gap, I don't have any fair value gap over here from 15-minute chart, so I can't think about kind of what to say, I mean the uh, I can't use any kind of fair value gap. So I have to, I'm bound to use the new week opening gap to understand the logic. First time it will close below this gap, I'm interested to look for sell. It will close above this gap again from 15-minute chart, I'll look for the buy again. This is the logic. And now if it leave the liquidity, it depends on the days, which day you are trying to trade. That is the important thing. So if you can understand that logic, that today is Friday, metal capital preservation day, as well as highly volatile day, as well as you are expecting a consolidation week, so of course you would start to think about sell only. It will go higher and take that buy side liquidity, let them take the buy side liquidity, then you would frame the sell only, because you are going to expect this is going to be an consolidation week. The weekly candle is going to be very consolidated. So here this weekly candle has to close with a very small body. So the more it will go higher, the more you will look for sell, something like that. That is all before the closing. I think guys you got something over here. So if I were here around this morning session, all of these buys, I wouldn't be able to touch these buys, nothing. I wouldn't be able to do that. Closed here, no buy is valid anymore. I would only frame the sell when this candle has closed below this range fair value gap or range 50% fair value gap. I would start to look for only sell, no buy over here, nothing. Why I was switching my bias, some buys, some sells. Why I was doing that? Because I have both sell side liquidity and the buy side liquidity. Both of them are very unique. Would love to come 15-minute chat one more time. Those people who are struggling about your all-time high or something like that, go to your regular trading hour. Okay, I believe that I have perfectly explained this resistance zone, this support zone. So I have the resistance here, that was the resistance line or the resistance zone. Let me remove this gap actually from my chart, this gap from my chart, everything from my chart. Perfect. That was the resistance over here. Market has, what did I say? Buyers took the buy here, not only here, they actually took the buy from there. Okay, so all of this zone, this is a zone, they took buy here because the trend is bullish. It's a bullish trend, market is extremely bullish. This week is going to be a consolidation week. First of all, you have to understand that. After understanding this consolidation week, next week what is going to happen? It is going to fall again. That's like, I don't know what to say, how to say that, whatever. This is the support, they took the buy, so these buyers are here. There is just the buyers, buyers, buyers are sitting around this area. Some sellers were very smart, they were thinking that I'm very smart, so I'm going to take the sell here. There are some sellers here around that area. Now the sellers got stopped out over there, so what they have done, they took the buy here to this line, they took the buy here, then they got stopped out here. These sellers, they are already took the buy, they're holding it. Okay, they are seeing the magic, they're seeing the game, what the sellers are doing. Okay, they're laughing at them, these buyers are laughing at them. Ah, you took the buy, you took the sell, why, do whatever you want to do. So they got stopped out here to take the sell, stopped out here, then they took the buy when it tapped to this zone. Breakout trader, they took the buy, they got stopped out here again. When they got stopped out here, look at this zone now. It has built a new zone, support zone. Okay, so these whole lows are the support zone. This low, that low, that low, just a zone, not a line. These sellers, when they got stopped out by taking sell, then taking buy, they're not interested to look for sell, because they now understand that I was going against the trend. Trend is bullish. So I went against the trend and then I bought in deep premium. So what I have to do? I have to buy again in the discount. So what they have done, they have taken the buy from here. This is now discount for them, because it maybe it is not coming here. maybe it is not coming here. They don't want to miss this buy, so they would love to buy it from there. They took the buy, they got some profit here, then it come back again here. They're adding more. These buyers still here. Their stop loss is to the break even. After that big run, they're more interested to look for the stop loss to the break even. Some of them put their stop loss below this zone. Some of these buyers put their stop loss below this zone. Some of them just put their stop loss to the break even and watching this game. Market came here. This all of these sellers, they took the buy here, and then when this market went higher, came until here, they also put these sellers, they also put their stop loss to the break even, got stopped out around this area, making the support again. Trust me, man, these buyers, these sellers who actually first took the sell, all of them are chasing the market now. They're adding more and more over here, because they are seeing that 1 2 3 4 5 6 7 8, 8 bottom over there. This can't be broken. This can't be broken. Nobody can break this area. Nobody can break this area. This market will go a bit higher again. Now, not by this week, because of course it is possible. By this week it will fall. Of course it is possible. I'm not saying that it's not possible, but this week should be a consolidation week. Why? Because after that big run, big weekly week fall, it should be consolidation the next week. It's going to be an inside week, and then after the inside week, it's going to be break every level with the speed. They will see some kind of boom, and then it will fall dramatically. Like, you will be able to see this type of fall again. See this candle, this fall. You are waiting for that type of fall again. Now, from where? I don't know. Maybe from here, maybe from there, maybe from there, maybe from here, maybe from here. I don't know. But it will fall. For example, it come here to this gap. That means I'm not interested to look for sell anymore. No sell anymore. If it come here, that means it is very near to this area, this all-time high area. There is another resistance zone. So what happened? All of these buyers, there will be not even a single buyers. They will keep their stop loss over here. They will put their stop loss below this zone. If it come to this last area, okay, maybe it will come until a bit higher and build another resistance zone. If it come here, this is the logic. If it come here, what will happen? This market will fall and take the liquidity. It doesn't mean that it is keep falling. No, after coming here to take the liquidity, it will go higher again, build all-time high again. If and only if this market come to this deep premium area, because if it come here to this deep premium, lot of people will take the sell at the highest price, buy at the lowest price. That is the logic they're trading. That is the logic. That's why I don't want to see it will come to this deep premium area. Instead of that, if it failed to come here and this time market come any of this area, maybe from the 4 hour chart I have something around this area, maybe this fair value gap. Okay, so maybe it will work with this fair value gap, which is actually right now it is working around this area. So it will work with this area, and then it will keep falling. I'm very happy to look for the keep falling, keep falling, keep falling for this sell side liquidity, or all of this zone, all of this area. But if it come here to this deep premium, then these sellers will be activated. They will say, okay, this is a very strong resistance zone, so take the sell over there. Then if this market keep falling and take this support zone, all of these sellers will be profitable. I don't want to let them profitable, so they're waiting. Their limit order is here, limit sell is here around this zone. They have put the limit order around this zone, so I don't want to see that market is going to execute their sell. If it execute their sell, it will fall, stop out all of these buyers, and then it will go higher again to stop out these sellers. So I don't want to see it will come to this extremely premium area. Instead of that, it will just come here somewhere, and then it will just keep falling. It will stop out all of these buyers. This can't be broken. Because of them, they are thinking, and this market will break them. This is the thing I'm going to tell you today for the last time, and it is going to happen, and this is going to be hindsight. Today or tomorrow, this is going to be hindsight. Thank you, sir, for understanding. If you have any question, let me know. Otherwise, I'll close my stream. Again and again, unfortunately, it's part of streaming that you have to simplify deal with. Don't get stressed over it. Thank you, brother. Brother, don't be a hater, you don't wanna see anyone profitable, lol. Okay, I'm so sorry, brother. I shouldn't say like that way. Sorry, sorry, sorry. But if you ask me, I really would love to see this clean highs will be taken and then this market will fall. That is the only thing I would love to see. Sir, please, what happened, Sachin? Sachin, what happened, brother? If you ever see this highly volatility, don't trade. Simply don't trade. It's not the money making session, it's the money taking session. You should think about your loss first. I have a question. Please let me know the question, brother. Today's PM session is gonna be fun. It's gonna be so beautiful. The PM session is going to be so beautiful. Shajan, I'm waiting for your question, brother. When you will be done with your question, I'll close the stream. First, I'm clear that 24996.50 are not the exact highs, but you just came in front of chart. I can understand that. So my question in next comment. 24996.50. It should be the clean highs. I was watching that highs from yesterday. It is not the clean highs. But I was watching this from the yesterday, brother. It should be clean highs. Oh, okay. It actually missed it by one tick. Mm. Highs 25.50. Okay, brother. I'm sorry, but I was seeing. Look, just look at this. It's not possible to see that it's not clean highs. It was just one tick difference. But when I put it like this way, it seems like clean highs to me. Okay, thank you so much, brother, for saying that. I thought that is the clean highs. So I was more interested to see these highs will be taken first. But yeah, still this look like very smooth highs over there. 1152 take 5%. So I don't know, brother. If you wanna close, you can close. Why are you asking me, man? When it has been made the exact lows in 1 minute, after same times it has made the relatively equal lows in 15 minutes or relatively equal to supportive few hours or few minutes. After this, I was very confused for a while, for which I have to give the important support or exact loss. As I told, if you have both sell side and buy side liquidity, if you have both sides, buy side and sell side liquidity, for here you have the both buy side and sell side liquidity, right? Around this area. Forget about these highs. Just forget about that. You have this clean highs here, and you have this lows over there. Okay, so let me actually mark the lows over there. No, not here, sorry. Here. Okay. So you have the sell side liquidity around this area. You have the buy side liquidity around this area. around 9:30. This is the 9:30 market opened. When this market has opened, look, very clear way. This market opened, you have seen this clean lows from 50-minute chart or 1-minute chart, clean lows. Okay, now my mistake, I thought that there is the the clean highs. Think that there is some kind of buy side liquidity, there is a sell side liquidity. So around the market open, you have seen this all candle is not over here, they're not over there. Market has opened here around 9:30. This is clean lows. You have the buy side here, clean highs, buy side over there. This is not still over there, so you have the clean highs. Think like this is the clean highs. Just think for that, like that way, from 1-minute chart. You have clean lows here, you have clean highs here. So first your expectation should be it will clear this clean lows, trade this gap, then it will go for this buy side liquidity. You should think like that way. Now just think like there is no clean highs, nothing. You don't have any clean highs, but you have the buy side liquidity here from 50-minute chart. You have the buy side liquidity there. So let me actually put it exactly something like this. You have the buy side liquidity there, you have the sell side liquidity here. All of these lows are the sell side liquidity. Okay, so let me actually mark that one there. That is the sell side liquidity. Of course, the obvious liquidity, by the way. So you have the sell side liquidity here, market opened there. You have the buy side liquidity here, obvious buy side liquidity, obvious sell side liquidity. Both of them is over here. Forget about this sell side liquidity. Market opened here. Which one is going to be highest priority to you? Mark the buy side, mark the sell side, right? You have the sell side, you have the buy side. Until this market is above this fair value gap, you will keep looking for the buying opportunity. Just the buying opportunity. Think about this buy side, think about this sell side. I'm just doing it for the sake of this question. You have the sell side liquidity, you have the buy side liquidity. Mark the range 50%. Look for any kind of fair value gap. Why I'm marking the bullish fair value gap? Because the market is above the range 50%. That's why I'm looking for the bullish fair value gap. If market was here somewhere, then I would look for the bearish fair value gap. Because market was below this range, 50% of this range, I would look for the bearish fair value gap. As the market is above this range, I'm looking for the bullish fair value gap. So until this market is above this bullish fair value gap, I'm more interested to see this buy side liquidity will be taken. Now my job is to go to 1-minute chart. What should I think right now? What is in my mind? Am I looking for sell? No, I'm not looking for sell. Why? Because this market is above this range fair value gap 50%. What do I need? I need to see the liquidity is taken. Here I have this clean lows over there. Just the clean lows, something very clean. It should be taken. If it is not taken, no buy is valid. That means without taking the liquidity, maybe this buy side is going to be taken. I don't care about that. Forget about that clean lows. There is no clean lows. Just think there is no clean lows. Just another low is a bit lower. What is I'm looking for? Buying opportunity. Market has cleared the liquidity here. Liquidity has been cleared. Maybe there is a bullish fair value gap. If it trade that bullish fair value gap from 15-minute chart, I can look for the order block to take the buy. Okay, any kind of order block to take the buy if it trade that bullish fair value gap from 15-minute chart. I'm looking for that buy side liquidity. Forget about the clean lows. If I don't have that, I will look for the liquidity to be taken. So this low, they're the relatively equal lows that they has been taken. The extreme low, market failed to take that extreme low. Again, it is not clean lows. Okay, maybe this low has taken over here by 2 tick or 1 tick or something like that. It has been cleared, so that is the lowest low. It has cleared all of this sell side liquidity, failed to clear that low. There is a bullish market structure shift, kind of bullish market structure shift, fair value gap. I would love to take the buy from this fair value gap for this buy side liquidity. This buy side liquidity should be taken by doing that. Okay, of course you have to have some kind of bullish bullish PDR as well from your 15-minute chart without using the bullish fair value gap, which actually didn't happen today. That means there was no buy over here. First of all, it didn't trade any bullish fair value gap. or bullish PDRA, so there is no buy. Simple. This is very simple. There is no buy. I just don't know if there is any volume imbalance or not. Just let me check. Yeah, there is no volume imbalance as well. So you can't have any kind of buying opportunity around this area because this didn't trade any higher time frame PDRA. So any kind of buy is invalid over here. But think that it tapped to this gap, bullish gap. Just think like that way, tapped to this bullish gap, and these lows are a bit below here, not the clean low, just a single low. It has cleared the liquidity, trade that bullish fair value gap from 15-minute chart, failed to take the extreme low. There is a market structure shift or the order block that has traded this bullish fair value gap, take the buy. How long? Until this buy side liquidity to be taken, okay? So market came until here, the buy side liquidity has been cleared. Then it has built a new buy side liquidity around this area. And you are now seeing sell side liquidity here. Why? At the beginning, what did you say? What you have done from the 15-minute chart? You have marked the range from here to here. That was your range. So you are predicting which one is going to be taken first. This one should be taken first because market is above this area. This liquidity is taken. Now what should your expectation? This sell side liquidity should be your expectation. No buy. Okay, just this sell side liquidity should be your expectation. Now from 1-minute chart, what you have done, you knew that liquidity is taken, but this low has failed to take the extreme low. In that type of situation, it has built a new liquidity over there, a very new liquidity. This gap is not valid anymore to me. Why? Because this gap has done its job. Liquidity range fair value gap, 50% gap, it has done its job. So now I have new sell side liquidity around this area. What I'm now looking for, sell from where? Taking the buy side liquidity, we'll go for 50-minute chart again. We'll look for any kind of bearish period over here around this area. So what kind of period do I have? First, let's see how far this market went. Okay, so let's see. Okay, what I'm looking for, sell. No, not the kind of something like that. I'm not interested. For example, this is that gap you are going to use. This is a valid gap, right? It is valid as a gap. Nobody has closed this gap at all. So I'm now interested to look for sell for first this sell side liquidity, then that sell side liquidity. The sell side liquidity has been built at the beginning. We'll go to 1-minute chart. What I'm now looking for, selling opportunity. First, if it can build a order block here, can I use that order block? No, I can't do that. Why? Because this fair value gap has been already traded. The order block job is done over there. It's not valid as an order block anymore. Here it was a valid order block because that was the gap. I'm going to use the first order block from the first time using that gap. New day and new week opening gap, you can keep using the order block logic. But the gap should be the first time. That means if there was an opportunity to take the sale from this gap at the beginning. Okay, so something like that. For example, it went higher, and finally there was no actually opportunity. This is the first time this market built the order block, and then this lot of the things you can use the order block here. That candle, see this consecutive candles, it doesn't look good to me at all. To be honest, I'm not interested to use them as my order block. I love to see it will tap here. This candle, look at this candle, tapped here, the next body has closed below this candle. It's my order block. I'd love to take the sell. No sell is valid from the order block from this gap. So what I'm looking for, any kind of other opportunity that can provide me the selling opportunity. So let's say what happened here. This my order block. No, why? Because it has been already used, so I can't use this order block anymore. What I'm looking for, sell. So I have seen this low has traded this gap. So if it can make a swing low and shift the market structure, I'll take the sell for this sell side liquidity. I'm not interested to look for buy anymore. Okay, so this market fall a lot, and then what happened, it actually went a bit and bit and bit and bit and went higher again. Okay, so it came here. What I'm looking for, sell only. No buy is valid, nothing until this sell side liquidity. I'm more interested to look for sell. Then at the same time I'm watching on my left, does it make any buy side liquidity again or not? Okay, so you can see there is a high. Forget about that clean high. So I was thinking this is the clean highs, but they are not the clean highs, by the way. So here this is another swing high from 50-minute chart, another swing high. So what this market has done, it came until this area, build a new buy side liquidity. Remember what I'm looking for, just the sell. So if there is any selling opportunity, I'll take that sell over here. but that sell will be valid if this buy sell liquidity is taken. That means if this market cleared this buy sell liquidity, any kind of sell is valid. Until it is not cleared, no sell is valid. Simply no sell is valid. Go to your 15-minute chart, look for that gap is still holding the market. See, it is not broken this gap. Now, why this gap is important? I have to add that as well. Look at that leg, to that specific leg, okay? Do you see any other gap over here in that specific leg above this gap that is still not filled by the body 100%? Do you see any other bearish gap in that specific leg? Now maybe there will be one gap for one tick or two tick. I don't like to mark those type of gaps as my last parallel gap. You know that. So this is the last gap below this high. This is the last gap from your 15-minute chart. Coming back to 1-minute chart one more time. So here the bodies are respecting this gap from the last parallel gap. Maybe one body will close from 15-minute chart and then the next body will close below this 15-minute last parallel gap. Still that is also valid, but now it has left that buy side liquidity. What should I think? It will fall a bit and then it will clear this liquidity, then it will boom. This is the best, this is the way you will look for that things. Okay, so what happened, this market actually went a bit, okay, and I'm just consolidate a bit and then started to fall. What do I mean by that? I mean, what should you think over here? Sell? No sell is valid. Why? Because market left that liquidity. No single sell is valid. Around here, what is the time? Kind of 10:48 or something like that. You will expect, forget about all the new day opening gap, new week opening gap, forget all of them. There is no new day opening gap, there is no new week opening gap. Can you think about this cell now? This cell. It is your question from your 15-minute chart now. Now you have not this cell. It's not that cell. That cell was related with the higher time frame. So this cell side liquidity and that buy side, that buy side liquidity. Okay, what was that buy side liquidity? I don't remember. That buy side liquidity is the old liquidity. This was the old liquidity, right? This low has been created with this low after so long time, and this was the liquidity. Okay, where was that? I think this was the liquidity. It is from the yesterday, not from today. It's not the new liquidity. Now what happened? It has built the new liquidity. It has built the new liquidity by this session or by the area. Like here, this low didn't been built by the session. This is the liquidity market has engineered by the session. This is the 9:30 candle. It has engineered that liquidity by the session. This is the 10:15 candle that has engineered the liquidity with a old low, old high. Inside this session, I am trading the New York session, morning session only. So it has built those liquidity by the same session. So I have now new range. Okay, so actually let me use this area. I'll just stay here. Okay, so I have now new range. Where is the range? From here to here. This is the new range. In this range, do you have any fair value gap? If you have any fair value gap, use that fair value gap with the same logic until the body is above this range fair value gap 50%. Above that area, you'll look for that buy side liquidity. If it closed below this fair value gap, you'll look for that sell side liquidity. If you have any fair value gap, you don't have any fair value gap, so you don't have any way to trade. You have to let one of them to be taken first. When one of them will be taken, you will look for the another one. Simple logic, brother. If it doesn't do that, you have no opportunity to trade this market. Just you will let them go. You have no idea to trade. For example, this market fall, okay, something like that. It didn't clear this liquidity. It fall here, around here, okay, around until this area. It has engineered the liquidity, cleared that liquidity. This is that sell side liquidity. At first we have used with this liquidity and that liquidity. At first we have used that liquidity zone. Now can it fall this liquidity? There's 99% possibility by giving the priority to this last parabolic gap. It has a possibility to hold this gap, the last gap or the entry gap. They will hold the market over there and then send it higher again to clear that engineered liquidity. Then trade something over here important, or maybe anything, okay, from your higher time frame. Then it will fall for this sell side liquidity. Why? Because it left that liquidity open over there. Otherwise, if it doesn't do that, Instead of that, it has cleared that liquidity. That means I don't have any buy side liquidity left over here. No buy side liquidity. Then market has fall, came until here. See this last parabolic gap, this entry gap, they are now valueless to me. Absolutely valueless to me. They don't have any value to me. Why? Liquidity is taken. So sometimes you see that I keep saying that this last parabolic gap, don't look at that gap. This entry gap, don't look at that gap. When this market came to this entry gap for the first time, maybe there is a bearish gap. That market didn't trade yet. So if it doesn't go through this entry fair gap with speed and come to this area, instead of that, if it come to this entry gap, react from there to trades or finish some unfinished business here after clearing this liquidity, for the next time it will come, it will go through this last fair gap with speed, or sometimes maybe it will be respected a bit and then it will fall for this sell side liquidity. That means they are not going to give me the reversal if the liquidity is taken already. If the liquidity is not taken, guys, I don't know I'm making it complicated or not, but I'm trying my level best to make it easier. If this liquidity is not taken and you have no fair value gap over here to understand, you have to keep using this gap. So what should you think? It has cleared this liquidity, that liquidity has been cleared, trade this gap over here. It is important to me, this gap, maybe this gap or maybe that gap, I don't know which one is going to stop the market. If it come here to this entry gap, give me a bullish setup, I'll take that buy. If it doesn't reverse from there, then come to this last fair value gap, I'll start to look for buy again from this last fair value gap. I'm not bearish, I'm not thinking about this sell side liquidity. No, it's not going to be taken until this last fair value gap is not broken. If it is broken, then it can take that sell side liquidity over here. If until it is not broken, that last fair value gap is not broken, I'm not interested to look for any kind of sell. No sell, nothing is valid. More interested to look for the buy for this buy side liquidity. Here is the question about the premium and discount. So how do I know that how far this market will fall? Now I hope that you guys all got the point over here. Now look for this sell side liquidity, that buy side liquidity. This market over here, it is coming from the deep premium. This is the deep premium. It is coming from the deep premium over here. Now it wants to come and take that liquidity. It is reversing from this discount. Now what you will do, you will mark this range over here to here. This is your equilibrium. This is the premium area. Now until here, this premium area, I'm happy, but I don't have any deep premium fair value gap over there. I don't have. Okay, for the sake of this conversion, let me check the hourly chart. Okay, here I think I have a gap over there. See this gap. Okay, I'm just marking this gap from the hourly chart because from the 50-minute chart I don't have any gap. This is all about the premium and discount. So let me go to the area. Okay, here when this market fall, come here, come until here, took that low, liquidity has been taken. See this liquidity, it has been taken around this area. When this liquidity has taken, that means it is in discount now. How to say that? If I would love to add this premium and discount, let me try one more time. This low and that low, this low failed to take that low. Think like, just listen to me because it didn't happen like that way. This low failed to take that low. That means it is still relatively equal lows. Liquidity is not taken. Remember, this is the obvious liquidity. At the same time, it has cleared that liquidity. Think that this low didn't take that low. Instead of that, it has built relatively equal lows. This whole zone is important to me. Why? Because this is the premium, this is the discount. This market can't go to the premium fair value gap before taking this liquidity. Now when this low has taken over here, it is going from the, what to say, I mean the very deep discounted area. Why? Because this is the premium. Why this is the premium? Because this high, all the highs has been cleared over here, right? This is the premium. If this high was not taken over here, this wouldn't be the premium area. This can't come to the premium area. As this high is taken here, this is the premium. So this market is coming from the premium and stop here. Failed to take that low, the deep discount, the previous leg. This is the previous leg. Previous leg low, market has failed to take. That means it is still in premium and discount logic. it should not come to the deep premium level before clearing that low. When this low is taken, it came to the deep discount now. Where this market is coming from the deep discount, now it is going from the deep discount. Do you understand? Because this low is taken. The previous leg is broken. This was the previous leg that has been broken. So it is going from the discount now. When the market go from the discount, and it would love to come back again to the discount, it should go to the deep premium, wherever is your deep premium. So this gap is deep premium, it has to go to this deep premium. So here is two logic. If this low failed to take that low, it can't go for that premium level before taking the liquidity. It can't go over here. If it come here, means this high is going to be taken. When it has cleared already the liquidity, it has built a new leg. Now it is coming from the discounted area. It is going from the discounted area. If this market would love to fall for this sell side liquidity, which it has built as an obvious liquidity, it has to trade the deep premium level before falling here. Now come here, and I'm just finishing these things with the deep premium and discount. So finally, it has built another relatively equal highs here, relatively equal highs. Where it is going from? Deep discount, right? This is the very deep discount. It come until here, build the relatively equal highs, buy side liquidity. Now you are going to mark the discount and the premium. This is the equilibrium. See this equilibrium? I'm going to remove this line from my chart. This is the equilibrium. Around the equilibrium, I have the entry gap around this area. What do I have? I have the sell side liquidity here. Obvious sell side liquidity. I have the buy side liquidity there. I'm going to remove this. Okay. I have the buy side liquidity here. I have the sell side liquidity here. Market is going from the discounted area. Why? Because this low has taken. So it is the discounted area. Either way, you are thinking it is coming to this deep premium. At the same time, you have seen this is a relatively equal highs. There is a retracement. This retracement is happening from there. Okay, after building that liquidity, the retracement is happening. How far you should look for this fall? This is my question to you, so that I can understand that you guys are getting my point. If you don't understand, then I will restart this premium and discount one more time. Just let me know how far this should come. This is the deep discounted fair value gap. This is the equilibrium. Forget about the price. We all know how long this market fall. Forget about everything. Just reply me depending the things I have already explained you here. Just depending on that, reply me. My interest is this liquidity is going to be taken. Okay, there is the liquidity, it should be taken. How long it should fall? Can it come here, or should it come here, or should it come to the deep discounted area, or it should work with the equilibrium? That is my question. Please reply me, guys. Otherwise, I will just close my stream over here, exactly over here in this unfinished area. Just reply me if you understand. If you don't understand, just write down, no brother, I didn't get it. Okay. Okay, Parag, I don't know what do you mean by 60%. I never talked about the 60%. So please don't add anything, okay? I have seen that some of you has told this last fair value gap, some of has told that equilibrium. Those people who has written equilibrium, do you really understand the fact and then say that? If you did that, thank you so much, brother. It should not come to this deep discounted area, because it is coming from the discount and you are expecting this liquidity will be taken. It can't come to the discounted area. It should not come here. The more important level is the equilibrium. That means I will let this market to fall until this gap. It should not touch this last gap. If it come to this last gap, this liquidity is not going to be taken. It is going to trade any bearish area and then it will fall to take this liquidity first. then it will go for that buy side liquidity. If it come to this last fair value gap or the deep discounted fair value gap, because it is coming from the deep discounted area, it should work with the premium area. Now the best area is here, that is the best. If it would love to fall until here, accepted. Come until this gap 50%, accepted. Should not touch this gap. Exactly from where, it depends on the market situation, liquidity, all of these things, it depends on that. But the best area is this deep premium area. See this premium zone, it should work with this premium and then take that liquidity. I will accept until equilibrium, okay, because there is no gap around this premium area, there is no gap, okay. So until here I'm okay, maybe until here I'm also okay with that, here okay with that, here okay with that, tap here, okay, I'm done. This market is not going higher anymore, it is going to take that liquidity first, because the deep discounted fair value gap has been traded. Think that there is no gap. What the, if there is no discounted gap, then you can't use this premium and discounted logic over there. Or if you can switch your buy, I mean chart, and from the hourly chart maybe you will get something depend on that, okay. What, I don't know what you do over there. So what happened, we can see this market fall and came to the equilibrium, okay. Didn't tap over here, it would be the best if it could tap over there and took that sell side liquidity. That would be the best case of scenario. And then, okay, right now this market has cleared that buy side liquidity. That buy side liquidity should be clear. That would be the best if it could tap over here. Now it worked with the equilibrium and then come here, use maybe used this order block, I don't know what it has used, but it was simply it leaving the liquidity over here. How long I'm expecting this market will go until this bearish gap from the hourly chart, because I don't have any other chart or any other gap from the 15-minute chart. So I'm expecting maximum this market will go for this deep premium fair value gap. It should go to the deep premium because this market is going from the discounted area. So it should come here and then fall again for this sell side liquidity. Is that 100% clear to you guys? This is called premium and discount. I showed you the same example yesterday here. You remember? Exactly over there. I did the same thing, same logic I have used. It is not enough for me. I should notice that it came here around that area. Hi Tito, I'm late. Hey Jamie, no worries brother. Below the equilibrium, no, not below the equilibrium, it should be to the deep premium, and I can accept maximum the equilibrium level, or those they're acceptable. But what is not acceptable, the deep discounted fair value gap is not acceptable. But the best is it will work with the premium, not even the equilibrium, it will work with the premium. Simply it will work with the premium and then it will go higher. Do I need to explain it one more time or I'm done with this? The thing you have explained, they're very clear to me, but my question is about, okay, what is your question brother? Exact lows and the support liquidity engineer, which should I give priority? Brother, should I say brother? Okay, let me let me go to ask you the question. It is the best way, I think. Brother, please look at the market now. The buy side has been taken. As I told, even though the buy side has been taken, I want to see it will trade the deep premium fair value gap. It's a random level to me. It should not be reversed from this random level. It should come here and then it should fall. It is my expectation. Okay. At the same time, if there is the daily gap, of course, let me check. Okay, it actually tapped to the daily gap. It can reverse now from there, but it's the lunch hour. Of course, around the lunch hour, no trade is valid. But I prefer this market will come here first and then it will fall. That I prefer more than anything else right now. Okay, let me ask you, Sachin, some question. if I ever see a clean highs or clean lows, for example, let me remove this gap, you have your answer on your mind, but you are just not getting that point. There is clean lows, okay? I'm here. I'm here. Not here actually. Sorry, just a second. Okay, here. I'm here. Now I've seen these clean lows. What will I say at first? I mean, even every time I see this type of clean lows, what do I say? I just speak a single sentence always. If I see the clean lows, I just say one thing. What do I say? Can you please let me know? No, I don't say liquidity. When I never say that liquidity. This law has to be taken. Absolutely. This law has to be taken. There is no opportunity. I have never seen in my life that clean lows or clean highs market left open. I have never seen in my life, not even a single time. So clean lows is something that what I'm saying that it should not be open. It has to be taken. It has to be taken. Now, if I see the support, then I'm using some kind of fair value gap, range fair value gap 50%, bearish PDRA, bullish liquidity taken, lot of things I'm using if this is a support, okay, not the clean lows. It's just a support, maybe obvious low. Okay, so something like obvious liquidity or the support or the engineered liquidity. What do I say? Do I ever say it has to be taken? Then market will go opposite way. Do I ever say like that way, brother? A very simple question. Just reply me. Do I ever say that, brother? No. Okay, so if I would love to give the priority, clean lows or the support of the resistance, whatever it is. If I would love to give the priority, which one should I look for? Support or the clean lows? Or the resistance or the clean lows? Depending on my comment, the reply you gave me. Okay, the thing I asked you, you gave me the reply. Now, if I ask you the question, I have the support here, okay? I have the support here and I have the clean lows here. Which one is more important for me to be taken? This support or this clean lows should be taken. If this area, okay, if I am looking for buy down, maybe I'm looking for the buy down. What should be my expectation? Do I ever say that this support has to be taken, then market will go higher? Or do I say that, okay, I'm looking for buy or maybe sell, whatever it is. It has cleared that clean lows because it has to be cleared. Maybe the extreme low is not going to be taken. The extreme low is going to be open. That is a sign of the bullishness because this is the support. Okay, maybe there is a swing low over here. There is a single low, or maybe there is a couple of swing low over there. Okay, something like that. Couple of lows. So it has cleared that swing low, clean lows. It is the extreme low. What should I say? Extreme low, market failed to take the extreme low or the supported area, support zone, cleared that clean lows, go higher. So now if I would love to ask you the same question you have asked me, brother. I mean, what was your question? Exact lows and the support, liquidity engineer, which should I give priority? I'm asking you the question, brother. Exact lows, what is it? Exact lows and the support, which should I give the priority? Look at this order block around this PM session. If the entry is around exactly 1250, this is the first buy to me around this PM session. If there is 22 YT model, I will use that 22 YT model. If there is no 22 YT model, this is the first buy for me around this PM session. And my target is this obvious liquidity. More importantly, to this gap. If it doesn't give me the entry opportunity, that is different case of scenario. But I am not interested to look for sell. The thing I have explained over here from the beginning. I was not able to do all of these things at the beginning because you know that I was late. Unfortunately, I was late today. Okay, so this is a swing high which is valid for shifting market structure. So let's see if it can give me the market structure shift. So I just opened the chart and I was doing all of these things. It is not, I don't think so it will come over here, by the way. Absolutely, brother. Exact loss. When I was surprised that market left equal lows two times today, is that means it's going to take buy today. I am more interested to look for sell again from this gap, these two line. So now my interest to see to let this market come here first and then here. Okay. So this is the market structure shift, which is the best 22 item model. Entry gap. Going to remove this order block. Breakaway gap. There is nothing more beautiful than this 22 YT model in this world. In this chart, there is nothing more beautiful rather than this 22 YT model. Entries here. Stop loss below this low, which is the liquidity taken. I'm not going to do that, what I should do, because people will start to think that, brother, re-entry, what the shit you are talking about. So this is the trade. If you are able to take this trade, go for it. I'll start to count the candle from here. 5 candle, 1, 2. Okay, this is the first candle has given me the trade. This is the entry. Go for 20 handle partial wherever the 20 handle is. Here, this should be the partial. After taking the partial, put your stop loss to the break even. First partial should be here. Put your stop loss to the break even. Hold your trade until that area. Am I inside the session? Yes, I'm inside the session. From 12:50 to what to say, I mean the 3:45. I'm able to take that trade. Come on, baby, on a Friday night, on your night, hit the dance floor, hit the dance floor. I want you, baby. Baby, I don't want you come tonight. Baby, I don't want you come tonight. I don't wanna come tonight. I don't wanna come tonight. Order block is there. Mentorship is there. Okay. আসসালামু আলাইকুম হুম আচ্ছা ঠিক আছে না হুম, না আমি বলে দিব না ওকে আল্লাহ হাফেজ আল্লাহ হাফেজ ওকে আল্লাহ হাফেজ। Come on, baby, I'm not far enough. Morning night, hit the dance floor, hit the dance floor. I want you, baby. Baby, I don't want you, come to know. Baby, I don't want you, come to know. I don't wanna come to know. I don't wanna come to know. The setup was the best setup, but it didn't work, unfortunately. Did I do anything wrong? No, I didn't do anything wrong. Everything was perfect. The setup was the best setup, just didn't work. Except that all of these things, okay, like the new day opening up, just if I skip all of these things, the setup was good, which didn't work. Sell, no sell. So here I'll look for a re-entry opportunity, not re-entry, a new setup opportunity. And let me actually remove the water plug entry there. Another clean highs over there. I'm going to remove this buy sell liquid. Instead of that, I'm going to keep this clean highs over here around that area. Here is the buy sell liquid suitable. This is the relatively equal highs, which is an obvious liquidity, and this is the gap from not from 50-minute chart, from the hourly chart. This is the last gap. Okay, so I'm watching this last gap to be traded first. Around here, this is the last gap. Okay, it has also traded the 4-hour gap, bearish gap. Also traded the 15, daily bearish gap. All of them are taken, but yeah, it's okay. Still, I'm not interested to look for sell. I don't know it will just give me the opportunity or not, but I'm more interested to look for buy instead of taking sell. I'll look for sell if and only if it has closed below this new week opening gap. Then and only then I'll start to think about the sell. Otherwise, no sell, only buy. I don't think so. It will give me any opportunity. Now, from taking the buy from here is highly risky from this consecutive order block. Reason is just market is below this new day opening gap. See this new day opening gap, so I can't use this consecutive order block to take the buy. But there's a possibility to trade this consecutive order. Why this is the order block? Why that is the order block? I'm expecting the bullish run. See, this is that 50-minute bullish gap. Okay, I have to use this three candle. Okay, so here this three is the consecutive order block here. Now, to be honest, this type of entries are bullshit. So I just think like this way. I would love to take a loss here for 20 handle. So keep it like this way, logical level. Okay, I would love to go with my speed. I'm not interested to take the sell, sorry, buy right now. We'll wait for some kind of opportunity here. The entry is going to be just below the new day opening gap. The problem is here, but this is the consecutive order block I taught you. Okay, but the problem is it is just below the new day opening gap. Can I use this order block here? I should not use it. It will be respected. This market will fall until here. I don't know that. If there was no new day opening gap, that could be my order block. By that candle close, when it has closed above this candle, it's the valid order block. Pushing button here just below this new day opening gap is highly risky. So what I will do, instead of doing that, if this market close above the constant encroachment of this area and there is a gap above that constant encroachment, I'll frame the buy from that gap. So above this constant encroachment, that gap is going to be the unfilled gap. After trading the order block, the gap is it is going to build. This is going to be the unfilled gap. So if you do that and the gap is around the 50% or above this 50% new day opening gap, I'll take that buy from there. Otherwise, as it closed below this, it can tap to this new day opening gap, come until here, it is possible, trade that, then it will give me the buying opportunity. I'm not able to take that risk. So I'll wait for that scenario because I'm going against the new day opening gap. I will look for sell if and only if the 50-minute candle can close below this new week opening gap. Otherwise, I'm still bullish. I would love to look for this one. And this order block, I'm not taking the trade. First of all, I'm not able to put my stop loss below this low, which is going to be like 36 handle. Not interested to do that. We'll wait for the re-entry opportunity. That means there is a gap above this dotted line. I'll take that buy from that area. If it doesn't do that, I'll let this go and I'll let him fall to until here. We'll look for another order block, same kind of order block from that new week opening gap to take the buy. as well as the setup I showed you yesterday's PM session, that the first gap is going to be the breakaway gap, next gap is going to be the entry gap. It is also not possible because this gap is fully closed by the week or something like that, so it's not valid as well. Okay, right now this market, I believe it is working with the 50%. Let me check. Yeah, it is working with the 50% of the mean threshold of that order block. It's not the breakaway gap, by the way, because it's already closed. One candle has closed below the mean threshold. If the next body has also closed below the mean threshold, I'll look for the order block entry from this new week opening gap. If this candle closed below the mean threshold, otherwise the same thing, like the fair value gap above that 50% of that new day opening gap. Anybody knows why this market is too volatile today? Too much volatile. And then try to fuck up Shadow's mind. Because shutdown, China trade war, lot of uncertainty. Okay. The gap is going to be created above this concurrent crossment. I'll try to take that buy from that gap, not below the concurrent crossment. If there is a gap which is going to be created above this concurrent crossment, we'll try to take the buy from that area. Before any big move is volatility. It is volatile, brother. The move is already big. This 150-minute candle, this is just 150-minute candle. Okay, so it's kind of 103 handle. 150-minute candle is 103 handle. It's already big. This is invalidated already because the body is closed below the consonant crossment or the mean threshold of that water block. Is also opaque expiration today. Okay, this is also the reason for this volatility. Oh man, come on, it's weak volatility. One minute candle is kind of 30 handle, 40 handle, like 26 handle. Wow. If it tap to this area, to this new wick opening gap, the first down close body close candle, I am going to use that one as my order block. If it tap over there, because now I will have a range from here to here. I don't need to worry about this new opening gap. If it doesn't do that, I will have nothing to do instead of waiting. I'm helpless when this is highly volatile. I'm helpless. I will never be able to put my stop loss in the logical level because of the huge volatility. So I will get stopped out again, again, and again. It's better to avoid this type of days where there is highly volatile. The market is highly volatility. And the way it is leaving the liquidity is too funny. To be honest, it's really so funny. The way it is leaving the liquidity. So let's say if it close below this new week opening gap, I'll look for the sell. Otherwise, the first down close body close candle is going to be my order block. So if the next candle close out this candle, it's going to be my order block. My buy is going to be from that area, and that should be the boom. If this candle close one tick out this candle, this is going to be the order block. This is the best order block ever, by the way. I'm just not sure that I'll be able to put my stop loss or not. Let me check. I can't do that. So I'll see like this way. It has to tap close above this candle just by one tick to validate this entry. Now this order block is more validate rather than this order block because this was just below the new opening gap. But here I have the range. From here to here I have the range. Kind of 28 handle range. So let's see. The last trade I'm going to actually frame, and again I didn't put my stop loss below the order block. I can't do that, so I'll just put it around 20 handle, something like that. Or if it doesn't give me the entry, that is it. That is another fun. Okay, that means without taking me, if it tap to this new opening gap, this entry is not going to be validated anymore. I'll just look for 5 candle before tapping to this new opening gap. Okay, so this should be the first partial. Let's go for 1:1. That should be the entry, and then the target is to the top here, this buy side liquidity. The entry is here and partial is here, target is there. It should work according to the order block logic. Yeah, my stop loss has covered the mean threshold of that order block. Partial here 20 handle, will try to hold the trade until this buy side liquidity. No bad things, nothing, just 20 handle risk maximum, 20 handle partial maximum, and then put the stop loss to the break even, hold it as long as you want. So Zivan, I mean last 2 days, yesterday and today, yesterday's the first session actually around the 9:30 was disgusting, and the PM session was absolutely no entry was there for me. Today's morning session I was not here. Even if I were here, of course I wouldn't be able to do anything over there around the morning session, because the way it was working, I won't be able to enter on that market the way it was leaving that sell side liquidity, so I won't be able to look for that sell side liquidity or whatever. But this PM session, when this setup appeared over here, trust me, this is the best 22 IT model. I mean, there can't be more, nothing more beautiful rather than this 22 IT model. And you were seeing this order block, this is one of the best order block ever. I mean, according to my logic, this is the best order block. Now what else can happen? See, this history can repeat. That means it left that buy side liquidity open over there the way it left the sell side liquidity open here. So what else can happen? Maybe this is going to leave the sell side liquidity, I mean sorry, the buy side liquidity the way it has left that sell side liquidity here. It can do the same thing, leave the buy side liquidity here, and it can keep falling. It can happen. Okay, I can see that it stopped me out, but I will just keep watching the re-entry opportunity, because I knew that I can get stopped out because of the stop loss. So if it close out this water block, we'll take re-entry and then we'll close the stream. If this low is taken, no more trade for valid to me. Not even a single trade is valid to me. This is one of the best order block, just because this liquidity is open over here and I have this clean highs over there around this area, some kind of clean highs. If it close above this water block, I'll go for this water block again. I wouldn't do that, because later you can think that okay, later you will say, brother, I wouldn't go for that, I didn't see that. No, nothing. If this candle tap to this gap here when it was going higher, this high, if this high would tap to this gap, I wouldn't go for this buy anymore. As it didn't do that, I'll try one more time to take the buy. If this low is not taken by the body, then the candle will close out this order block. I'll try to take re-entry opportunity over there. Otherwise, if it doesn't do that, keep falling, I will have nothing to do. Reason is, the way I know how this market work is, it takes the liquidity. And today what is happening? Again and again, leaving the liquidity, leaving the liquidity. I have no idea why it is happening. So in this type of situation, maybe it's difficult for me. Okay, it didn't work. That means the market is not going to work the way I love to work with the market. It's not working like that way. It's not something like I'm wrong. No, it's not something like that. Something leave the liquidity and then it is going higher. Leave this liquidity. It should not do that. Clean lows, strongest liquidity should be taken. One time I accept it because it can make the strongest liquidity, but next time it should be taken. Same thing here. Buy side liquidity left, and I also have the clean highs over there. Not clean highs, but kind of clean highs. I would love to really see this highs will be taken. They are leaving. This market is falling, keep falling, keep falling. Came to this new week opening gap, built the best order block, didn't work with that order block, leaving the liquidity. Now it will keep falling. Take this sell side liquidity. It's kind of the area where I'm not able to trade. I can't trade this market because it is leaving the liquidity. Today is really so difficult. I'm seeing the way it is leaving the liquidity. Seems like it doesn't happen. Okay, it doesn't happen. I don't know why it is happening with this highly volatility. Why it is happening, I have no idea. I was looking for the logical entries, but it didn't work. Simple. I think it's gonna be beautiful from the next week, I hope. And today's Friday also difficult to trade. It's simply just not moving at all. Manipulation is only reason for this condition. I think so, brother. But manipulation should be done, right? Something like that. This is the area, but the manipulation is not happening. That's my problem. And it's just falling, falling, falling. Came to this last fair value from 15-minute chart. It should not do that. Should be respected from this new week opening gap. As well as this low has traded this last fair value gap. So nothing was wrong over there, and this market has built the beautiful order block. Now it will go higher. It seems like that it doesn't want to enter and leave this market. No, it's not possible. It's not doing that. No, it's kind of wasting of the time and money around this area to trade. I'm not able to trade this market. I think only ICT is the only guy who will be able to say, okay, that is going to take it, that is going to take it. No, it really got surprised when it left that sell side liquidity. It should take that sell side liquidity over here. Yesterday's at the beginning session and this today's whole day until now, it should be so beautiful around this PM session. I was thinking like that way, but the way it is leaving this liquidity, I'm not saying it's so beautiful. It should not be left. 2 days is really bad day. Yesterday and today is bad day. Yesterday's AM session exactly around 9:30, and today's whole day, the whole day is bad. Unbelievable. It's been a long, I don't see this type of price action. It was the price action from 2024. In 2024, every day I struggle because it was leaving that liquidity like that way. Let me check the ES one more time before closing. Yeah, also there is no SMT or something like that. Nothing. I think there is the SMT. No, there is not. There is also not the SMT. Nothing. Come on. Okay, this guy has made the SMT. Look at that. Now I can't say that it is going to take that liquidity. If it was other days, I would say that it can't fall without taking this liquidity, but today I'm not able to say that. It's not respecting the PDRS. Simply it's not respecting the PDRS. Nothing. I hope guys you'll survive by today in this highly volatile market, and hope from Monday it's gonna be beautiful. I hope so. Okay. I don't use the 5 minute chat, brother. Unfortunately, Rohit. 5 minute chat is something I don't understand at all. I'm not feeling so confident now that this is going to be taken. I'm not feeling at all like that way. I'm just thinking that can it reach here? Like feeling very confused. Oh man. Even if it would love to fall, it should come over here. Okay, that was my expectation that it will come here and then it will fall. And after leaving this liquidity, tap to this gap, take this clean highs, tap here, then it will fall. It was the best case of scenario. And this is how this market should work. But this bullshit market is not respecting anything. Okay, thank you guys for being over here. I'm so sorry because this I have to go now. I'm not able to read this market in this bullshit scenario for me actually. Okay, for me, I'm not able to read this market. It's not respecting any of my PDRs. Nothing. So yeah, we'll see you maybe next Wednesday, Monday and Tuesday. I won't be here. So next Wednesday. Until then, cheers, guys. See you, brother. Happy Sabja, and thank you so much, Sujipan.